This is a video taking you through fearless skating, which was the assessment that we used. You're going to have to do this as a prerequisite to doing the reassessment, which we're going to do on Thursday next week, which is your rostering home time. So we'll do that period 1 and 2. So what I'd like you to do is open up the fearless skating spreadsheet that's also on the email I've sent you and work through this with me. All right, so the first thing we've got is this trial balance. On the left-hand side is the expenses and the assets. On the right-hand side is the income and basically the liabilities, where we get our money from, where we spend our money. First thing you have to do is make the adjustments. 40% of the rent lease is classified as a rental expense. So we're going to type in here, down the bottom, and the figure of 40% of the rent lease, that 22,000, just multiply it by 40%, and then you're going to have this one. That'll be times 60%. Right, so notice that these two balance once you've entered that in. The next one, annual subscriptions are 200 a year. 2 members are still owing, so we call that subscriptions in arrears. I'll be typing these in as we go, and there's 2 members, so that's $400, and we're going to add that to the subscriptions here. So it belongs to this year, so it's income this year, so we've got to add it in. 900 of insurance being paid in advance. It's called a prepayment, which is an asset for us. It's an asset because we're going to, if we cancelled our insurance, we'd get that $900 back. So it's plus to prepayment and minus to insurance. Minus to insurance of prepayment because that $900 belongs to next year, not this year. So we're taking it out of this year's cost. So that decreases that. Note we still balance. 160 still owing in wages. So we're going to type accrued expenses. Accrued just means owing. And type in your 160. And then it was for wages. So we're going to add that 160. Depreciation on rental skates is 4,000. So add that one in. And if we add it on this side, where do we add it on the right-hand side? That's right up here. So we get to press pause and keep up. Right, so we added it to here. And the last one, depreciation on equipment, is 20%. So this is an expense showing the value that equipment's gone down. So equipment here is 32,000 times 20%. This is an excellent mark because you've had to make the calculation. And you're going to add it to the accumulated depreciation. So this is all the pre-work you have to do before you do the statements. Now it becomes actually quite easy. Just notice that those two balance. Now we're looking for the rental skate activity. So anything to do with the rental skate, how much money do we make out of it? So it's basically going to be the rental skate income minus the rental skate expenses. You're just finding the things, the income on the right-hand side where our income is, that's got anything to do with rental skates. So it's just that rental fees. I can't see any others. And because there's only one, it goes in the last column. So we're going to take away our rental skate expenses. Again, looking down here, anything to do with rental skates. Not the skates themselves, because that's an asset. So just equals and click on each one. Don't bring the figures in yet. Advertising, rental skate wages. the rent on the rental skate and the depreciation on the rental skate. So all of those are expenses on the rental skates. See what we did there? Highlight, change from a big plus to a little plus, left click, drag across, and then just auto sum. So you see we've made $22,000 is our expenses, $3,000 is our income. So it gives us a rental skate surplus. One minus the bottom one always. All right, our income. We're going to start off with our rental skate surplus. And then any other income. Now, income's on the right-hand side. So any of these that are what we've earned. So looking through there, we've got the Sport Wanganui funding. And we've already used that, so it's just the subscriptions. Again, highlight, change to a small plus, drag across, that's called fill across, and add those up. All right, remember to press pause so you can keep up. Expenses are those things on the left-hand side that we've spent money on that we don't have anymore. So we're going to start off with the affiliation fee. Loss on sale is an interesting one. That's where we've sold something for less than it cost us. After loss on sale, not the rental skates, we've already used that. The rent lease, secretary's honorarium, social media cost, and the equipment depreciation. So when you've got all of those, highlight, fill across, and total. Auto sum. Right, and then we'll go see that income greater than your expenses. So again, that gives us a surplus rather than a deficit. Top one minus the bottom one. All right, so that's step 2. So we've done, hopefully got excellence here and excellence on this one. Next step is to do your property, plant and equipment. I'm just going to hide these so we don't see this. It makes it easy just to bring the figures across. Property, plant and equipment are the assets that we've got that last a long period of time, the physical assets. Got 2 of those. One of them is the equipment and the other one is the rental skates themselves. All right, so we're putting the cost of the equipment. That's this figure here. We paid $32,000 for the equipment. Cost of the rental skates, $23,000. Easy marks for you. Accumulated depreciation, that's these figures here. So the equipment is that one, and the rental skates. These are merit and excellence marks, which we had to adjust. Now, the carrying amount, that's what it cost us, at $32,000, minus what we've written off over its life. So according to us, our value of equipment is $15,600. Fill across, our value of the rental skates, cost minus accumulated depreciation, is $13,000. And we're just going to auto sum that last column and fill it down. So we have to do this before we do the top part, because our last one in our assets is going to be property, plant and equipment. Put a 1 to refer to note 1 down the bottom. And that figure is that bottom figure, that 28,800. And then we look for other assets. So assets, again, are things that we own. We've got money in the bank, which is great. Looking down, we've used all of these actually. So the only ones we haven't used are our assets. It looks a bit messy because of these gaps, but that's fine. And we'll get a total assets. Okay, so total liabilities, we can type total assets if we like. but we won't this time. And total liabilities, again, these are things that we owe money for, and they're on the credit side. So we owe money. Looking down here, we've used all of these already. So the first one's debentures. That's the loan to members. Next one's loan, and the last one's that accrued expenses. So highlight, fill across. And so your net assets equals always minus top one minus the bottom one. Assets minus liabilities. That's the value of our club. However, we've got to prove it. So the opening balance of accumulated fund, we find accumulated fund over here, which is our 12,000. And we're going to just unhide. We're going to add there our surplus, which is 340, and that gives us a closing balance. So what the club's worth at the end, just auto sum. And you'll notice that one there and that one there balance, so that's excellent. So now we move to the cash flow. So the cash flow statement is actually quite easy. On the receipts, we're going to grab all those things that are receipts or are revenue. So that's our Sport Wanganui funding, our rental fees, and our subscriptions. So the idea of the cash flow statement is to find out what happened to our bank account. So we've got to look at the money coming in. Payments, we start off with our expenses. Quite a lot of these. We're not going to include our non-cash expense, which is our loss on sale. So having all of these will give you an easy achieved mark. The merit marks come out of these other information. So the other information is last year's loan was 24,000. You see this year's 18,000. So does that mean we've paid off loan or we've received more? Hope you said paid off. So we're going to chuck loan in there, and the difference between 24 and 18 is 6,000. Next one, new equipment was entirely funded through 4,400 in debentures. So we've got debentures coming in of 4,400, and we spent it on equipment. And the last one is new skates were purchased. Last year's cost was 15,000. So where's our new skates? The skates has gone for 23,000. So we're going to say rental skates. And we've got 23,000 minus 15,000. We've got 8,000 in new skates. So total up your payments, total up your receipts, and you see the bank account went down by 18,000. Okay, so we know what our ending bank account is. Our ending bank account is this figure. So your beginning bank account is equal to your ending plus your beginning. Or sorry, minus your beginning. 23,000 at the start. Our bank account went down 18,000, so it ended up 4,800. That's all you have to do. All right, good luck with having a go through that one there. I'll need to see that on Monday so that you can do this on, well, I need to see it anyway by Tuesday by the time you come in.